All right, good morning. Welcome back here to Trader Money. Great to have you aboard. There's a few things out there this morning that are kind of same old. We've seen. It's kind of been a consistent element, and a few things that are just a little bit different here out there in the market. And so, let's go take a look at it. Before we do so, there are no new signals here this morning for the challenge test. So, here this morning, just nothing, nothing triggering. There are some things that are close, but just aren't there. Just aren't there yet. And we'll talk about some of the things that are getting a little bit close. But as far as actual triggers here this morning, nothing there. Here just yet. Okay. So anyway, that's that's easy. Don't have to do anything next. And we'll see where the triggers are this afternoon and react accordingly. I do want to point out that the video discussion yesterday of sorting methods has been added here to the spreadsheet. Tomorrow we'll talk about the ATR method, and then that'll be added here to the spreadsheet as well. All the videos each day that we do AM, PM, added to the spreadsheet. Now, question that came in yesterday that I want to respond to was, the time frames, the this kind of 10:30 in the morning and 3 o'clock in the afternoon time frame to make decisions. Is that going to be consistent? And the answer is yes. It may be adjusted. The closing time may be adjusted when we go live with this, but it will be 2 times a day. Two times a day where trades are made. There will be alerts that go out. When a trade's made, it'll go out like before, and trades will be made at these times. One of the that's an important element to me, because one of the things that I know causes frustration for people is when they're out and about, they're doing their stuff, they're going, okay, is there going to be a trade? Is there not? Man, I'm in the middle of Target right now, and I'm checking out. I can't make a trade here. So they kind of feel like they have to sit at their computer all day. That's not what the challenge is about. That's not what trading the market's about. I don't know about you, but I can't sit at the computer all day, stare at the market. There's a level of insanity that starts to come in with that, and don't want the challenge to be that. And so, a big part, and it's a very difficult part of this automation process. It would be a lot easier if it were seamless, meaning things could happen at any time in the day. But very important to me to have the challenge, where it's 2 times a day. There may be a third time a day thrown in eventually. I do have another test going on during this time that I haven't shown, where there are decisions being made. 2 hours, 2 hours, well, right in between the morning and the afternoon that we're using in this test. But I don't think it's going to be all that different. I don't think it's going to be all that game-changing, and I don't think it'll be worth, really adding here, in terms of the challenge. So just wanted to address that and, make sure that is that's understood, and that's the direction that it is heading. All right. Okay, so market here today, opens up, we see it, you wake up and futures are up, right? I mean, that's kind of been every morning. You wake up, futures are up. They're not up big, but they're up, right? And, this morning, same thing. Futures took a jump up, here on the Chinese data. We talked about that yesterday, how that could be a driver. It's not the best data in the world, but slightly better than feared. So, we did see a little bit of a jump up. And then, we get some trade data here in Europe, and okay, all right, a little bit of drift. And then here comes the U.S., and we get some trade data here this morning, and all right, we get a little more of a drift. And then we see S&P futures hit their high just as the market opens. And this is something we've seen. We've seen futures, kind of be driven up and then that kind of early sell. Now, this is a magnitude that's a little bit stronger than what we've seen. This sell has been 18 points, right? This is a stronger move. In fact, many days we haven't had an 18-point range in the entire market. These pullbacks have been 10, maybe 12 points, not the 18 points that we see here this morning. But the big difference, magnitude slightly higher, but even that, not that big of a deal. But you look at the volumes. That first minute, 20K volume. That's pretty hefty volume, and you even compare the volume this morning to the volume yesterday. Significantly more volume this morning on this move than what we saw yesterday. Now, the norm in this market has been what? We get the morning sell, and then we get the little rebound, and then we kind of dance around for a while and drift on higher in the afternoon. Now, yesterday was just a little bit different. We saw this kind of sharp drop here in this kind of, 15-minute period in the last hour of the market. Now, by sharp drop, I mean, we're talking about 10 points. We're not talking about anything massive. But, quick, fast rebound here with it, but this is kind of the first time we've seen some sharper selling coming in around the close of the market. So price action not all that different, but we are seeing a few kind of early warning signs. Nothing that's overly bearish, but bear markets, you tend to see what happens at the opening close drive the markets, and this is a bull market that's been driven by gaps, right? Gaps higher, and it's one where if you start to look, in fact, we could look at it a little bit here. There's an indicator that you can throw in here to the market. And here we go. We'll go with the accumulation distribution indicator here. And what happens is this kind of takes and looks at, takes a look at whether or not, stocks are, whether or not the gains are coming, during the day, or whether they're basically gap types of moves. And, you can see that the appreciation here, we saw this accumulation distribution line really grow during this move because stocks would open up and they would move higher throughout the day. Since then, though, it's been a muted move, even though the market's had a pretty strong move up from this point, but it's been pretty muted because, most days market's just kind of, gapping up and sitting. It's not gapping up and getting bought to any sort of significant degree there. So, we can see that, this is just one of those kind of early warning signs, but, it's also one of those early warning signs that, is generally looked back upon later on and used to say, well, yeah, that was a warning sign to the sell-off. But a lot of times you get these warning signs come in and, you don't get a sell-off. So, right now we're in that. It's a warning sign, and that's it. It's not anything greater than that. But, we see that kind of with the market. Now, the market's similar to yesterday in terms of the sectors that are moving this morning. You take a look at healthcare. Healthcare down almost 2%. It is absolutely getting throttled here in the last couple days. Utilities, real estate, all down. And then you look at energy, tech, industrial, consumer discretionary. They're leading the way. There's still strength there, right? So, yeah, the market's gone red this morning, but we're not talking about a sectoral breakdown that is bearish. We're not talking about this, we're not talking about selling in areas that are, strongly bearish. Now, we are talking about selling in healthcare, which is an area that hedge funds are in. And have been heavily exposed in. And, some of the hedge fund underperformance data, so far this year has been pretty startling. We'll get a little bit more of it here in the next couple of weeks. And this move in healthcare is just not going to help. But we saw it catalyzed by United Healthcare yesterday, and it is just continuing to see heavy volume selling come in and, very little in terms of a bounce, right? It's not like it's moving down and kind of bouncing along the way, right? This is something that is just, we saw yesterday. It's just pretty much straight down. that there's very little in terms of these kind of small upticks and bounces up to show, hey, you know what, maybe some buyers are using this dip to set in or to step in. This is all sell all the time, and we saw that continue on here this morning. It has slowed up in the last 30 minutes, but we see that continuation. So that's driving things, and it's also driving the some of the small cap underperformance. We saw small caps gap up here this morning and lag here so far. In fact, let me, there we go. But they are bouncing a little bit. IBB, the biotechs, biotech stocks are a big component to small caps. And so when we see the small cap sector, getting rocked, sometimes it's driven by the regional banks. Other times it's driven by biotech. And right here it's driven by biotech. But you go out and you look outside of this area. You start to go to Micron. Can you tell that the market's kind of had the action it's had this morning? Nope. All right. Now, Micron got a little bit of an upgrade here this morning as an analyst came out and said, hey, the recovery in NAND flash may actually happen sooner than expected. If that's the case, right, that is the bullish case for Micron. If there is a recovery in NAND flash memory, Micron's kind of two memories, right? It has DRAM, which is its cash cow, and it has NAND flash memory, which is its growth area. And, the big drop has been, yes, DRAM has come down, but, the growth in NAND flash has fallen, quite a bit. If NAND flash does start to grow again, that's the bullish case for Micron. If you want to make a case for Micron to 80, you make it around NAND flash, and if NAND flash grows, Micron to 80 is not that difficult to get to. If NAND flash doesn't grow, and we see DRAM price contractions continue, the price action, we're going to 20. It's going to 20. That NAND flash is that important, here for Micron. We see Caterpillar moving up, again here today. You really can't tell what's going on with the market by looking at Caterpillar, FCX. Same type of thing here this morning. So the market remains highly differential. Yeah, there's a little bit of different action going on in a few areas, but the differentiation is still very high. This isn't the type of action we typically see when the market's saying, all right, we're ready to make a big reversal. Now, we've had a lot of earnings, right? We've seen Netflix, here we saw after the bell yesterday, an extremely muted reaction by Netflix. Netflix is one of those stocks where historically you can go and, we could just look at this chart. We can see where earnings were, right? Here's this gap, big gap, good volume. That must be earnings. Here we go. Big gap, big volume, that must be earnings, right? It's pretty easy to see where the earnings are, for Netflix, quarter after quarter after quarter by looking at the chart, because you tend to see a big gap. You tend to see some good volume come into play. You don't see what we see here today, which is, a small gap up and, hey, just kind of sitting here. Just not really doing a heck of a whole lot. If you go look at what's happening to the option values, they're absolutely getting clobbered as the implied volatility comes out of them. And so very muted reaction here with it. We've seen IBM, who is reacting to the downside here, but has been bought up here since the gap up. I think IBM's earnings are a little stronger than what the price action suggests, but I think the gap down was warranted, given what we saw here from IBM, and we'll go look at that a little bit closer. But I think one of the most important earnings things or earnings commentaries out there this morning has to do with Bank of America. Now, Bank of America reported earnings, yesterday, right? So, it's not that Bank of America is reporting earnings here today, but we see some analyst commentary starting to come in, and this is one of the things that I think if you're going to wrap a bearish thesis around the earnings season, which is very difficult so far, by the way, that it's not an easy thing to do, but you wrap it around this. And analysts at Jefferies downgraded Bank of America to hold, basically saying, look, there's not enough upside here on Bank of America to warrant a buy rating. They talked about, hey, you know what? They're seeing some, small revenue growth in different areas, and they have a $32 price target, right? So they're still looking for it to go higher, but downgraded to hold as they don't see a lot of upside potential here with it. If we start to see that type of analyst commentary echoed out there, I think it will be one of those that the Bears can take and really run with. For today, it's a one-off. It's a one-off. It's one where, we can find other analysts who say, exact opposite things. But, that's the thing going into this earnings season, right? What's going to be the revenue growth going forward, right? We're going to have revenue growth, revenue contraction, earnings growth, earnings contraction this quarter. The market's looking forward. What's it going to be going forward? And the market is putting a very rosy look on things. But you start to hear analysts talk about lack of upside. That could be a little bit of a catalyst here, for things to the downside. But again, this is a one-off. We would have to start to see that in other areas. Now, we start to look at other areas. We look at things like CSX. I mean, just a fantastic report. Just a fantastic report. In fact, let me show it to you visually. The price action is up, and so is Kansas City Southern. But here's the earnings per share versus expected, so beat it by over 10%, which isn't unusual for CSX. That's kind of how CSX has been. They've been beating on earnings per share. Here's the revenue. We saw the revenue dip here a little bit below expectation. But even with that little bit of dip below expectation, you can see that they continue to grow quarter over quarter, right? And with things going forward, they're still looking at quarter over quarter growth here with CSX. That's the important part, right? If those things hold, then it's, going to get cheered. It's going to get a positive reaction. It's if those things start to break down, then we're going to see some more negative types of reactions. But, quarter over quarter, year over year revenue growth, continuing here for CSX. And, is it good enough of a report to push it to 80? Probably not that good, but it is one that it's a pretty solid one. You look at Kansas City Southern, it's also making that reaction here, but pretty solid here overall for the rails here early. Now we also saw earnings out of Pepsi. Which you can see the stock reaction here on Pepsi, pretty strong there to the upside. And if you come in and you look at what it looks like, you can see they're kind of in their weak quarter, right? This is always their lowest quarter, Q1, just because of the cyclical nature of the business. But you look at the revenues here. There's still quarter over quarter revenue growth, going on here for Pepsi. And while, yes, the stock's, pretty overvalued, pretty high priced, it still has that quarter over quarter revenue growth associated to it. And that's why I say, hey, you know what? Yeah, you can make a bearish thesis on this earnings season, with a few things. But the big issue, this revenue issue, it's still in the Bulls' hands. It is absolutely still in the Bulls' hands, and we're not seeing them let go of that when we look on aggregate at the majority of companies that have reported earnings here so far. Last but not least, IBM. Which they're still trying to integrate Red Hat. You can see the earnings drop here. This is one where quarter over quarter compared to last year, actually see an earnings drop, right? We've kind of seen that here with IBM. There's been some hopes that that's starting to shift, especially with the Red Hat acquisition. But you can see the revenue miss. That's why I say, you know what, IBM deserves to gap down on their earnings here today with the revenue miss. But when you start to look at IBM and you start to look at things going forward, it's one of those where the comparables are going to continue to be a lot easier. IBM's lack of performance over the last 3 years has really brought down their comparables, and they're just simply a lot easier than they've been. Is it as good of a valuation story as what it used to be here a few quarters ago? No, it's not. Not nearly as good a valuation story, but it is. It's a story where they don't have a high bar. You look at a stock like Chipotle Mexican Grill, right? They're starting to put in a high bar. Netflix had a high bar where they better come through or they're going to get sold. And IBM simply just. They don't have that high bar. That bar has been kind of thrown away, and it's a pretty low bar, and they don't have to have something spectacular to continue to drive on higher here. Overall, but we're seeing IBM's earnings affect something like an Adobe. It's breaking below the 7-day moving average a little bit here today, not in any kind of major bearish way, but we're seeing some of that come into the market here this morning. Okay, all right. So healthcare driven drop here this morning, and but not one of those where you look at the aggregate and go, wow, this is really bearish. In fact, it's one where you look at the aggregate and if you don't have a lot of healthcare stocks on your watch list, it looks like a pretty solid market here this morning, right? As long as you're not looking at S&P futures, you look at the advancers versus the decliners, they're pretty even in terms of number of advancers versus decliners. The big drops here, are mostly in healthcare. But there's one other thing I want to show you here. I don't know that I would jump into it right here, right now. But Blackstone owns the Cosmopolitan Hotel in Las Vegas, right? And pretty big hotel there. Pretty big property there, and that they own it, right? This morning they announced that they are looking for a buyer. That's probably not the right terminology, but they're basically putting it up for sale, right? And I think it was Deutsche Bank. They kind of hired to broker the sale and to help with all of that. So what does that mean? Right? What's that mean? Well, that means who's going to buy it, right? Who's going to buy it? Who's going to step in and purchase the Cosmo, right? Selling the Cosmo would likely be a bump up short term for Blackstone stock. We see when things like this are sold, a lot of times it's a short term gain for the stock or for the company that's selling it. But it's also a short term loss for the company that buys it. And so you start to look at something like a Las Vegas Sands pulling on back here today. Are they going to step in and buy it? Probably not. Is Wynn going to step in and buy it? Yeah, maybe a little more feasible, a little more probable. Is MGM going to step in and buy it? Probably not, right? But, this is an area where with that property up for sale, if you start to see a little bit of weakness come into the area, it's probably a pretty good sign that, this is who's kind of in the running for, purchasing that hotel. And chances are it'll be met with some short-term loss, followed by some long-term gain. That's kind of the normal cycle. Sell off early and get bought up later. So it looks like they're looking at something like $4 billion as far as a sell number for the property. So pretty, pretty hefty. It doesn't have to be bought out by Wynn or Vegas Sands. There's other groups, right? There's Asian groups that could come in that, we don't have traded stock. There are other private equity groups that could come in. There are a lot of different groups that could buy it. So it's one that I don't look and go, well, you know what, there's a trade on for it right now, but it's something that is starting to happen, which could create some action here in Wynn. And if Wynn starts to break below the lows from the prior day, might be a little juicy there for short term action. But overall, I think it's more of a buy for Blackstone than a sell for Las Vegas Sands, Wynn, or any of the others as it sits right now. Okay. So wanted to show those here this morning and how they are, how they're sitting, and you want to go buy Blackstone. It's set up. It's definitely set up, and you just trade it and buy it as long as it holds the 7. You run with the uptrend that is there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.